I guess I'll go. My name is Wendell Holmes, and we're at the genesis, the very beginning of creating Charles Johnson Park landscaping. And so the idea is to maintain a green space in the center of the community, but also to become a profitable landscaping business with the intent of offering jobs, particularly to the returning citizen population of Sandtown, Winchester, and Baltimore.
Awesome. Grew up right down the street, have family there.
Wow. What street?
I grew up on Callow Avenue, the
Callow.
2500. My aunt lives on Mount Street, right across from the police station.
I know exactly where you're talking. Yeah.
Yeah. You may know my Aunt Marcia. She's been there for.
I do know Miss Marcia. Yeah.
Yeah.
Yeah, I do.
So thank you for sharing. So where's you said Sandtown, Winchester, what area, which streets are you focused on? So, is it a particular vacant lot?
Yeah, it's the 13, 14, and 1500 blocks of North Bruce Street. It used to be houses, but they raised the houses, and so they've left vacant lots pretty much.
Gotcha.
And so the idea is, by beautifying those spaces, it will incite investment on the vacancies around there. And hopefully there's a spreading effect.
Yeah, so we were right down the street on Whitelock. So when they knocked down all of those vacants, they came with the condos and community gardens. So totally different look.
Yeah. I'm personally in Reservoir Hill. You're talking about Reservoir Hill? Yeah. I personally live on Reservoir Street. Yeah.
Okay. So that's where. Okay.
Yeah.
All right. Well, thank you for sharing. We went down memory lane. All right, who's next?
Good morning. My name is Rodney Jordan. One of my colleagues, Jamie Pickens, is also on the call, and our other colleague, Yvette Bell, is traveling today, so she won't be able to make our session this morning. But our business is a for-profit Park Place Neighborhood Equity and Enterprises LLC. And
wait a minute, give me that name again.
Park Place Neighborhood Equity and Enterprises LLC.
Okay.
And that title or name comes out of our efforts to advance the economic, I'll just use my words, the economic control of the neighborhood. Very similar to what you all were just talking about in Baltimore. All of us have long-term stakeholders in a neighborhood that has been under, quote, revitalization for 40, 50 years, has been the recipient of, as Norfolk, Virginia has in some ways copied Baltimore, in other ways has led Baltimore in displacement and Negro removal. Our effort is we also have some vacant lots and properties in a neighborhood that we've worked with others for the last decade to trend towards being a healthier neighborhood that can compete in the marketplace for families to choose us as a place of choice. And so what we're really here as part of this training is, as we, I should say that Livette and Jamie bring real estate and property management backgrounds to the table, and I bring technology and community engagement to the table. And what we're seeking to do is to be able to develop our neighborhood in a healthy way while also providing ownership opportunities for residents in the neighborhood in that process. And so we're going through this co-op training to learn more about how we can leverage, to whatever extent is applicable, some of the principles of cooperative economics into our for-profit shareholder redevelopment business.
Awesome. Okay.
And I've been to East Baltimore, so
You've been to
spent a lot of time.
If you know Baltimore, you do not say that to a West Baltimore person.
I know.
Very defined here.
My sister-in-law is from West Baltimore. One of my good friends from college is from West Baltimore, and my mother, who taught at Norfolk State for years, taught Cheryl Washington, who leads the East Baltimore Development Initiative. So those are some of my Baltimore connections.
Oh, nice. And you know, it's so funny. I was telling Ron, my daughter wants to go to HBCU and study environmental studies. And I couldn't remember the third college. We're going to North Carolina A&T, FAMU, and the third one was Norfolk State.
Well, when you come to Norfolk State, let me know. Jamie is a graduate of Norfolk State. We'd be happy to show you around and walk you around.
Excellent, excellent. I definitely will take you up on that. Okay, well, thank you for sharing. That's very interesting. And I like how you have the wraparound support with the real estate development and the community engagement and the technical piece. I think, yeah, that's a beautiful partnership. All right, who's next? Is this a shy group? Okay.
All right.
I see Mr. Simpson, Olga, and I'm gonna try it. Onyinye. Onyinye. Oh, I see somebody put something in the chat.
That was
Jake. Oh, the green to go. And if you're unable to speak, are you willing to share out in the chat? That's cool too. I like to know who I'm talking to, because this is a conversation where we're getting to know each other.
I don't think they're there.
Oh, they may not be there. Okay.
Yeah, I don't think they're there.
All right.
Okay.
All right. Well, Jamie, we can give you, even though I'm your partner introduced, we can give you a chance to speak.
Oh, someone said they're here.
Okay, come on and speak. I think you're muted if you're trying to speak. And I'm gonna see if I can share my screen. Oh, I can't get back to that. Okay, well, I'll get started. And this is a two-way conversation. So at any point, you're able to speak. I would love to hear from you and hear about your initiatives. So I also work with the Greater Baltimore Urban League. I oversee the Entrepreneurship Center. And at this center, we provide technical assistance to businesses for free through either volunteer business coaches. There are some that are paid, and they have various skill levels and different backgrounds. I have marketing professionals, business development professionals, financial professionals, and they will provide one-on-one coaching free of charge to the business owner. So I like to give that plug if ever you're in a space, not necessarily for a specific service, but maybe if you're looking to scale and you want to kind of take a brainstorm or just talk out which direction you need to go in, or maybe thinking about going in and you don't know where to start. So it's a great service. It's free of charge to the business owners that I encourage anyone to utilize if you're looking, if from the idea phase to looking to scale or to maybe possibly sell your business. Today's objective, we're going to go over the basic accounting equation. And we're going to look at the financial statements and just give you a brief background on the purpose. And we're going to evaluate our GAAP reporting versus cash basis. And then we're going to have some fun with some sample programming. So I like to ask, and I can't see you now because I have the presentation up, but if you can put in the chat, how many of you, okay, I see someone did share, it was noisy. The project is, we're starting a cooperative rice farm. Very new to this, but eager. Awesome. Thank you for sharing. So I would ask, if you put in the chat, how many of you have accounting systems built up or have experience with some type of accounting software? QuickBooks, Wave, if you old school, Peachtree. I mean, it's a whole host of different accounting systems. And not even necessarily directly, or you work with an organization that had, where you had access to the reports. Okay, I see it, QuickBooks. Yep, okay. All right, so this could be a refresher for everyone. So you can just humor me. But I do encourage, if you have any questions, please feel free to throw them in the chat. I'm a board member for a nonprofit that uses QuickBooks. Awesome. Yeah. QuickBooks is one of my favorites, especially QuickBooks Online, and not necessarily because it's the most robust software, but just flexibility. Let's see. Oh, all right, here we go. So this is the foundation of accounting. It's our accounting equation. It's the assets equal liabilities plus equity. So to break it down, your assets represent what you have. You have a building, computer, desk, trucks. Those are what you have. People owe you money. The cash you have in the bank, any type of investments. Oh, any liability attached to the asset, the truck note, the mortgage payment on a building, if you have any equipment loans, any debt that is owed out, that is considered your liability. Now, the difference between your asset less your debts, that's what's left. That's your equity within the business. That's actually what you own. So you can have $1 million worth of assets on the books, but it really doesn't matter if you have $1 million worth of liability on the books. You own nothing. So that equity represents the net worth, not just the gross assets. So that accounting equation feeds into the balance sheet. And with the balance sheet, the way it's derived is because it's supposed to balance. Your assets are supposed to equal your liabilities plus equity. So just FYI, accountants are not creative. So they're going to give you the most basic name. So they came out with balance sheet. And it tells the organization, your financial situation at a particular time, but it's a cumulative effect. So if you began your business 10 years ago and it's 10 years later, it accumulates the money that's been going in and out of your cash. It maintains the type of assets you owe. It reduces your liabilities on the books, reduces or increases. And we'll go in a little later, of course, with your assets, we have what's called that depreciation. So it will reduce your assets as well. So let's go into the nitty-gritty. What's some of our types of assets? You know, we got the cash, accounts receivable, our prepaid expenses. I'm gonna put a pin in that, inventory, investments, all those self-explanatory. Except for your prepaid expenses, I wanna give you a glimpse. Some of you, if we have insurance that we may pay for 6 months or upfront for a year, we put the amount that we have prepaid that we have not used yet, we put that on our balance sheet. We call that a prepaid expense. Because at any point, if we cancel that insurance, we're entitled to a refund. That is money that we receive back. However, each month that we're using the insurance, then we will reduce that prepaid expense. Okay. On the flip side, here are some of our liability accounts payable. That's your 30 days net, any type of credit cards. That's pretty straightforward. We're going to put a pin into our accrued payroll, and we're going to put a pin into the deferred revenue. Our accrued interest, if you have some type of debt and there's an accrued, you have to accrue the interest from the 15th to the 31st. So you can account your books, include for your month and on your books. Member deposits. So if you have any, almost like security deposits that you're holding that they're entitled to at the end of a contract, end of a lease, or whatever the agreed upon terms, you're entitled, you owe that money back unless if for some reason there was a breach of contract. And again, loans payable, that's any loans that's attached to any asset you're building, a vehicle. Okay, so we're gonna go back up to our accrued payroll. So if we have a payroll system, and you know the fun is, depending on what your payroll period in, how it falls, and the date you get paid. Usually it's a week or two lag time between payroll date ending and when you receive the payment. If that crosses over a period end, so if it's your month end, quarter end, year end, then we have to accrue for the difference. So I'll give you a quick and dirty example. Let's say December 31st is your year end. However, you don't receive your pay for December 31st until January of some time. So what we have to do is to include that payroll on the books for December 31st, because you actually earned that payroll. We have to accrue it in that December 31st period, even though you won't get paid for it until January. So that does not affect when you pay for it. This is just a back office accrual or adjustment on your books. All right, so now in the deferred revenue, if you have, for simplicity purpose, you have rents that you, no, I'm gonna use better, grants. If you received a grant, the funds came in, however, you did not earn it. You didn't do anything to really earn that grant. So at that point, and you may not. So you put it in deferred revenue because at any point, if you don't use it, you lose it. You would have to give the money back. That's the concept. However, during the time, maybe it's in deferred revenue because you have a particular activity that's not going to take place into the next calendar year or next fiscal year. So once you put it in deferred revenue, and then that next year, you'll reverse it out and you'll spend down on the funds. So any questions? Are we still up? All right, you're as excited as I am. Okay. And that equity, this is where it gets spicy. This is where sometimes there's some confusion where I have clients say, oh no, I'm worth all of this money, or I'm worth $1 million because I have all of this in assets. And that does not, as you saw our accounting equation, it's not about that gross of what you own. We want to look at what you owe as well. So now we're going to switch this over to the co-op. You'll see when you have multiple members, shares, and however you your structure is, the members then have ownership into this this entity. So I think Mr. Jordan and Ms. Pickens, when you're talking about, I like how you were very intentional that this is a for-profit entity. So any of your members, they may be entitled to a percentage of your net profit at the end of the year, or however your dividend or whatever your distribution is. It's some type of tangible ownership within the organization. And let's see, we talked about the dividends. All right, so our income statement, which is affectionately known as our profit and loss. So this is probably the most popular statement that the banks, any funders, anybody's asking for. And this is also how you build out your budget that I heard Ron mentioning earlier. So the income statement, that's your financial performance over a period of time. So if you have a calendar year end, it's from January to December. That's it. That next January, you start off with a clean slate. You're starting off with zero. So we only want to see, how are you doing? How did you do this year? And the beautiful thing of an income statement, I tell clients, you get another period to start back all over again. You can leave last month. If last month was a bad month, guess what? You have an opportunity to create a new month and to increase your revenue, minimize or decrease your expenses. So that's the beauty of the income statement. It gives you a fresh start. So let's look at our examples of revenue or income, your member charges or assessments, if there are any fines, annual dues, interest and investments. But it can include anything outside of your membership charges. I see we had the landscaping. If you're charging different companies for landscaping. And for the community development, I don't know if you're looking to acquire and control buildings and rent them out, you may have rental income. Or if it's just looking to renovate, to sell to homeowners, then it will be some type of maybe commission associated with it. And I'm sure everyone knows our examples of our expenses. And a lot of times, some companies will say, well, I want to reduce my expenses. And I want to change your mindset. You want to see, what is the cost to do business? What are your monthly to generate X amount of revenue? How much does it cost you per that amount? So for instance, if your goal is to make your budget maybe $100,000 for the year, what are your costs associated with it to make $100,000? And that would include, it doesn't matter if you're doing this right now, you're not drawing a salary. I want you to budget in there that you are drawing a salary, because you wouldn't work for anybody else for free, so you don't work for yourself for free. So even if you can't draw a salary now, you still put it in your budget, because you will. And those funds are owed to you. You looking at, of course, utilities, if you have any interest expense on any loans that you acquired, insurance, technology, outside professional services, and your professional services include attorney, accountant, within that space, supplies and education. So I'm going to give a plug for the industry of accountants and attorneys. The plug is you may find them expensive now, but it'll cost you more later. So I've seen so many clients will come back and did not get an accountant, didn't consult with an accountant or an attorney in the beginning, and it cost them 3 times more later. You don't necessarily have to retain either one of these, but you at least want to make sure you have things set up in the right direction and you're protected. So if you had nothing else from this presentation today, and my other plug for an accountant attorney, go with who the better referral and who you're comfortable with, because both of those are very intimate relationships. And you want to make sure this is someone that you trust and that will make sure that your business and your interest is protected. Okay, I think my formatting is a little wacky, but here's an example of our balance sheet. So we're looking at our cash, accounts receivable, and then we're talking about some restricted cash. So the restricted cash is if someone earmarks some money and it's for a specific purpose. This may be some endowment funds. This may be a donor that said, okay, I'm giving this $30,000 cash strictly for Norfolk State University to help with the library construction. So that lets the account, everyone know this cash cannot be counted a part of your operating cash. Cost of your land, your building, and you see your total assets of $147,000. And then on the flip side, you see our liabilities, our accounts payable, loans, member deposits, and the difference of that equity, but it balances out to $147,000. All right, any questions? Y'all still with me? Y'all gotta give me some type of energy. I can't see you, can't hear you. So give me something in the chat to make sure we that y'all still here with me. Okay, thank you, Mr. Jordan. My dog even chimed in. Okay, thank you. Thank you, Jamie. All right, good. I'm glad we're still here. Okay, this is my income statement. My income statement, it shows our income. Actually, I'm gonna pause for a minute. Let me let my dog out because she's trying to overtalk me. Okay, sorry about that. We show our revenue, income, and our expenses that we spoke of earlier. And yeah, I'm sorry, the format all wacky. And you see, but our net income comes down to $4,000. And how we build in our retained earnings, which is our equity, how much we're worth. We show that beginning retained earnings plus that net income, and that gives us an ending equity of $54,000. Okay, here we go into our methods of accounting. So we do have other methods, but these are the two popular main ones is our GAAP, generally accepted accounting principles, and our cash basis. So cash is straightforward. Cash is what it is. When you receive it, you count it. When you spend it, you count it. Now, GAAP is when we want to get we want to add a little flavor to it because we know we're getting some money and we know we're going to spend some money. So we want to include that on the books. So let me forewarn you, you cannot bounce back between. You have to pick one and stick with it. So sometimes, depending on your industry, one method may not make your financials as attractive as another method. So for instance, some of my clients that will probably always be cash because it's hard to count, some of my service industries that are mostly cash basis. So that would be the salons, the barbers, some of the truckers, in that logistics, transportation. What other? But where I will maybe use more of a gap is in the real estate, because sometimes those transactions can span over accounting periods. Construction, that's a big one. I would use gap for them as well. And especially construction is a little tricky because you're looking at work in progress, and yeah, they can go on for a while, and you're looking at the percentage of work completed and matching that up with your expenses and revenue. So yeah, those are what popping in my mind right now. So our generally accepted, this is also known as our accrual method. So when we were going over the types of expenses and types of liability, and I think I had an accrued expense and accrued payroll in there, this leads into GAAP. If we were on cash basis, we wouldn't have any of those fund accrual names. It would just strictly be the cash in and cash out. They are generally used for our formal financial reports. So sometimes the banks, or if you're on a government contract, they will ask for the accrual method. And especially if we have to conduct audits or reviews, or compilations, we will transfer your financials over to an accrual method. And it shows that revenue is recognized when it's actually earned, not necessarily received. So when you actually earn it, so it may be you earn it in 1 year, but you don't actually receive it until next year. And it's the same thing with expenses. They are recognized when incurred, not paid. Okay. And as I said before, here's with our cash method. Is straightforward. Yep, revenue recognized when the cash received, expenses when it's paid. So let's see, the internal. So most time, co-ops and any other type of entity, they, for simplicity, if they don't have an accountant doing their monthly reports, they report it on cash basis, which is fine. And then the accountant, if it's monthly, quarterly, or annually, will make the adjustments to convert it over to GAAP for presentation purposes. All right, so then I briefly mentioned our depreciation earlier. So I'm sure anybody has purchased a car and they say, oh, as soon as you drive it off the lot, it depreciates. And that's with any asset that we purchase. It allocates each year for the use, or each month, the use of that particular asset. So it's your building renovation, your furniture equipment. If they're reported as assets on your books, then they are not expense. So it would not show on your profit and loss or your income statement. They would strictly show up on your balance sheet. And this includes, I know for my business development, real estate development also includes renovations. So if you're making repairs to a building, you have to be very careful how you classify it. So say the repairs may come to $20,000. So some instances, businesses will try to expense it. And then we're looking at, and it may cause for a huge loss because you didn't generate any revenue. You spent a lot of money renovating the building, but the next year you anticipate receiving rents or, what have you. However, there may be a challenge or pushback to say, well, then as opposed to expensing that, you need to include it into the cost of the building and call it building improvements. And then it will increase the value of the building. So, and it talks about how depreciation just spreads over the cost of the expenses over several years. So, and it's a nice tax benefit. If you're in a situation, which I will claim that everyone will be in a situation where you have a significant profit at the end of the year. So maybe about October, you're recognizing like, oh, we're gonna have a profit. Let's strategize how we can minimize our taxes that are being paid. And we know that we need to purchase some assets and put those on the books. So it doesn't give you the dollar expense. You don't necessarily expense it. However, you do get some bonus depreciation where you are able to do the expedited depreciation for that first year of the assets you purchase. So it will help reduce your profit, which will in turn reduce the amount of taxes. So if you're a for-profit entity. Okay, everybody with me? Let's see the chat. All right. Okay, well, I hope y'all get ready soon because we're going to have some assignments. This is not a one-way presentation, so I'm about to test your knowledge real soon. We're going to have some fun. And this talks about what I was just speaking about, our maintenance projects and repairs. Far as capitalizing, meaning adding it to your balance sheet versus expensing it. All right, are we ready? So now we get ready to work through, and I may have to, I can't minimize it. Put the chat. Work through our, an example. Okay. So the end of December, the cooperative borrowed $1 million to develop its first property. The development cost exactly $1 million. Oops, I gave you the answer. So we're going to talk through it. So this is our balance sheet prior to the opening. This is our $1 million asset. And then we have our $1 million loan payable. So this particular property, we have no equity, okay? All right, here we go. So assumption one, the co-op has 30 units as well as for the, wait a minute, for the full to the start of the year. Oh, it was full. The members are assessed at 1,000 each. So 30 units, 1,000 each for the month of January, for a total of $30,000. But 2 members didn't pay during the month of January. And 1 member paid their January and February charges. So how would that look? Let me say, okay. Oh, there we go. We can add it. Okay. So what would our, if we're on GAAP, what would our, we can do a GAAP and a cash. What would our revenue look like?
30,000.
Is that GAAP or cash?
That's GAAP.
Okay. What would cash look like?
29.
Anybody else? Oh, I see something in the chat. Okay. Agree. Okay. Give me 1 second. All right. We had the gap at 30,000, and our cash, was that Mr. Jordan? Oh, Mr. Holmes, who gave me the answer?
Holmes.
Mr. Holmes, okay. I should have knew it was Baltimore represent. No, I'm just kidding. Okay, Mr. Holmes, excellent. All right, so y'all get warmed up. You see where we're going with this. We're going to up the ante. Okay, and then we were showing our lot, but we didn't get to that point of the deferred of $1,000 for the one person who prepaid in February. Okay. So assumption 2, in January, the co-op purchased 5,000 worth of supplies. 4,000 were paid by the end of the month, and the staff incurred 8,000 of wages, for which 7,000 were paid by the end of the month. Let me give you a little do, 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 do. So, all right, what's our expenses looking like?
Okay, this is Jamie. I'm assuming that cash would be 11,000, and that the gap would be 13.
So tell me what numbers you put into your, what you have. You said gap.
So for gap, I used the 5,000 and the 8,000. And for cash, I used what was actually the 4,000 and the 7,000.
Oh, I see. Okay. Yep. Okay. I had you the other way around. Okay. Now, my other question is for gap and cash, how would we record the expenses of supplies and the expenses of salary and wages?
That I'm not sure.
Okay. Anybody else want to have some fun with this? All right, so let's talk through it. So let's talk through it. Okay, so we purchased some $5,000 worth of supplies. So we know that's our expense, right? Now, how we paid for it, it's what's important. So of which 4,000 was paid by the end of the month. So we paid 4,000 in cash. So what does that mean? What we're going to do with that difference of $1,000? Nobody have credit cards on this call? Am I the only one? Am I out here by myself? Nobody else has done the some type of credit? Will we pay that later? So we want to have accounts
I
payable.
was thinking, yeah.
Yep. So we're going to have that accounts payable of 1,000. So that's on that one side. And now for our staff. So we have the wages of 8,000. That's how much people earn. But we only paid the 7,000 by the end of the month because they probably get paid for the rest of it. That will go on next month's pay. So that's when we use the little sexy terms, the accrued expenses. Y'all ain't ready to have fun with me.
We just following, keep going.
No. All right. So let's look at it. So remember, we still have our 30,000 from before when we had the 30 units and we had the gap and the cash basis. So now let's look at our supplies. Look at how much what it makes a difference on how you pay for things. So on accrual, we're going to report the whole 5,000. But on cash, you didn't pay for the whole 5,000. You only paid for 4,000. So that's only what we're going to book. And it's the same thing on wages. You earned the whole 8,000, but on cash, you only paid for the 7,000. So, and I'm going to tell you, this is when you do have, and you see with this small little picture and with, very small numbers, how this really can change the picture of your financial statement. So for instance, if you come to me and say, okay, I'm giving you all my bank statements. So guess what? I'm going to report your financials on cash, but I don't know the whole story of your business. I don't know that somebody else, that you owe one of your other workers another $10,000 because they put in some extra time, but they're not getting paid until next year. So you see where the accrual gives you that whole picture. It's that intimate relationship where cash is like, okay, I'm just gonna give you my bank statements and you'll figure it out from there. But it's really not telling the whole picture. And we can see how the difference in, this is our gap, our difference on our balance sheet. Oh, I lost my note. So now we're at the 18,000. We had, what was it, the 30,000? Uh-oh, I'm sorry, I lost my little count. But that's including the revenue that came in, less our expenses going out. Then we had the 2,000 on the accounts receivable. We had 2,000 accounts payable, the 1,000 that we owe for the supplies, 1,000 we owe for payroll. We had that 1,000 deferred revenue for the February. And you see that it is showing up, cut off at the bottom, but it shows up differently on your financials. So let's talk through some of the things. Let's see if I got my check going on. Give me some examples of, first of all, revenues. And I'm really interested in hearing from my friends that couldn't speak, because I'm always, I like hearing the overall vision, but I want to see what's your source of revenue? How are you monetizing the great work we're doing? Is it a membership? Is it a fee for service? Are we selling a product? So if y'all can give me, and I'm also interested in Mr. Jordan and Ms. Pickens, what's your, because y'all gave me a lot in that name, and I see potential different revenue sources, but I would be interested in, what do you see as your primary revenue generator?
So, oh, go ahead.
Go ahead.
No, you go.
Okay, I'll go first, and then you can correct anything or help me out. So we haven't fully fleshed out ours yet, but our revenue would be based on rental income if we do a rental project, or sales of any houses that we develop. And also it would be the whatever we determine the cost of buying into the investment from the community members.
Yeah, and I was going to say something similar. So our first approach, we are looking at a new construction model. So we've looked at, you know, pre-construction costs as far as acquiring the land, building a house, selling the property, and then having the income be the return. Mm-hmm. And then, as Jamie said, while doing that, we also, in our modeling or planning, are also looking at if we do more of a rental model, if we acquire a property and then manage that property, then what's the income back to the company? And then ultimately being able to define how do we do distributions to our investors, depending upon how we do that. So, but our current project that we're looking at is is looking at new construction and doing a model / pilot in that regard, and then long term looking at whether we're just a entity that acquires properties and sells properties and that's our income, or whether we have rental properties in the portfolio.
So, and you could do both.
Yeah, we that's what we talked about. Our immediate focus, for a variety of reasons, is on the new construction piece. Mm-hmm. But at the same time, and that's why this class is important to us, because over a long term, there could be a limited supply of lots that you can acquire and houses you can build. Whereas with rental, it could be a much longer term business model for the company.
And I think you're in a great space because there's also opportunity for tax credits. If you, depending on the community, the whole political climate, but it's worth investigating about what credits are available.
Yes. Historic, yes. We are not doing low-income housing tax credits because we feel that the neighborhood already has a disproportionate share. Mm-hmm. And our goal as a part of this is to raise the wealth creation opportunity for the mm-hmm. community as a whole, and not just the corporation.
Mm-hmm. I'm with it. Yeah. Okay. But let me also say, because low-income tax credit is not the only ones, we can also look at, if you want to do mixed use, you can put some commercial tax credit, new market credits. Yes. So it's way of leveraging.
Yeah, so we're definitely considering that. I just wanted to, when you said, only because of certain trauma that I'm dealing with.
I got you. I know. Yep, I'm with you.
I just had to make the statement that the concentration of low-income housing tax credits in Black neighborhoods is not always a good thing. That's all.
Yes. Yep, I'm with you, and I agree with it. Okay, I like that, and I appreciate the multiple streams of income. Especially you're in a real estate can be a stable but unstable market. It depends on the political climate. It depends on interest rates. Like, it's a lot of drivers. So I think that having a mixed portfolio.
Yeah. When you come to Norfolk, we're gonna walk you around Norfolk State and talk about some opportunities.
I'm really excited about that because it's so interesting, and then we're going to move on. when I shared about Norfolk State, they someone's perception, and they were from a different part of Virginia. They was like, ugh, I don't know. I don't know about the surrounding areas of Norfolk State. So I say, baby, we from Baltimore. It's not like, yeah. I mean, we have Coppin that's right in the middle of our North Avenue. And Morgan is on the east side of Baltimore. So it's yeah, I don't, and plus I don't believe in being, you don't go nowhere that you're not comfortable with your people. So that's not my, so it's just interesting that you, yeah, that you said that. So
We're
thank you. Uh-oh, I
And what
missed
you
you.
said again, Jamie?
No, I just said we're on the same page. Exactly, yeah. exactly. To all, amen, yeah. To all.
Yeah. Okay, so I'm interested in Mr. Holmes. What's your revenue source? I know you said with the landscaping, so I'm thinking that's contract work.
Yeah, primarily fee for services.
Okay. Okay. And now what about the vacant lots? Who is paying for those? Is that a city supported effort, or is it you drumming up your own funds to support?
Yeah, somehow that's going to be a supported initiative through the company, or obligation through the company, right?
Okay.
And so the fee for services are sort of outside of the community.
Okay.
But the responsibility for the company is to maintain those particular lots.
Gotcha.
At its whatever expense.
Okay. Okay. Now let me ask you, who owns those properties?
Right now, the city owns most of them. We own a parcel, but I'm in the process of petitioning the mayor.
So you can't charge the city for maintaining those lots, because they give out money for that.
Yeah, I guess. Well, I hadn't really considered that. Actually, I'm interested in controlling the lots so that it sort of, controls what's done on the lots in the future, right? Mm-hmm. And so that they cannot be, sold from under us, and improved with buildings or whatever.
So how you control the lot is to get it. You gotta change the ownership of the lot. And if that's what you want to do, because it's no need in saying you want to control a lot, and next year or 2 years from now is another mayor in there, and they don't care what you agreed on with Mayor Scott. It's a different narrative, and they will boot you out. So what I would suggest is pulling together and looking at how to get ownership of the lot. If you go through housing, and I'm speaking from experience, and it's a long fight. But we went through housing and real estate, and it took about 3 years for us to get site control and ownership of a community building. Wow. But that if that's what you want to fight, then that would be, I wouldn't ask for anything less.
Right. Yeah. Yeah, that's the goal, is, to own it.
Okay. Okay. And then it's worth the sacrifice of not receiving the funds. So now I understand that your strategy. I got you. And once you acquire ownership, how will you look to leverage that land to generate any revenue? What would you like to use the land for?
Just to create and to maintain a green space, right? In the community, for the community. And, actually, it would just become like the signature property of the company, to market and procure other contracts, even city contracts and, private and public contracts.
So Mr. Holmes, please don't, and no one else take this the wrong way. Y'all know I'm an accountant by heart. You got to figure out how are you going to monetize that land. Land is valuable. I need you to figure out how you're going to make some money off that land. I don't care if it's growing crops. I don't care if it's putting up temporary housing. I need a revenue stream, because that's that, and that's where you have to show how you owning this land is going to add value to the city.
Yeah.
And they don't want to hear about you making it pretty.
No. So it has to have some money-making ability, you say.
That's it. And now it can be within the community. So I'm gonna give you an example. We took site ownership of a community center in Park Heights, and it was a big fight. However, what we're saying is we're leveraging this. The community get to say what goes in here. We generate income off of the rent that businesses come into the community center. However, the community say what businesses rent that space. We're very intentional. We're just not having any business owners come in. However, everybody has a stake in the claim. You have to pay rent in order for this community center to thrive. Because guess what? BG&E doesn't care about that we're doing great work for the community. So, so it's just, and it could be, so I just want to, it could be anything.
So what about, renting the space out for events, like concerts, weddings, birthdays?
That's it. Now we're talking. Yep. And getting creative. Yep. So that's all. That was all just come up with some type of revenue model, because they want to know that you can maintain it, and a succession plan, some type of legacy. So when all of us gone to glory, that this land is still taken care of.
Right.
And it doesn't leave with you.
Yeah. So couldn't that be in the charter, or I don't know if that's the term, or the charter of the company itself?
The bylaw, yeah. And it may go to a community association, or it may go to a church, or whoever. Yep.
Right. Correct. Because I'm thinking through outside accounts, that will generate enough revenue to secure, the continued maintenance of those particular lots.
Yeah, and that's it.
Yeah.
I mean, because that land is valuable. And and we want to make sure we maintaining it in the community. So that's and we have a revenue structure or sustainability model that goes with it.
Yeah, but I find what happens in the city is, the lots over time, they just become, neglected, right? People start parks, they get grants, right? And they create a nice green space for the community, but then over time, and it really doesn't take a long time, the maintenance kind of fails and falls by the wayside, and it becomes an eyesore again.
Yeah.
And so it depresses the whole neighborhood, right?
And one of your cohorts, your team, they shared a link in the chat, and this is exactly what I'm talking about from housing department. They have RFP, requests for proposals, out now for urban agriculture.
Yeah.
Mm-hmm.
So
and it is with the lack of funding. You're absolutely right. And that's why I'm saying we have to create our own funding models.
Yeah. Yeah. I mean, I happen to be up the street. I don't know if you've heard of Strength of Love Farm, but I'm in the next block up from the farm. I'm actually a member of IOC, Intersection of Change, who actually operates that farm.
Oh, okay.
Yeah, and so it's actually the particular property I'm interested in. It's in the next block up.
Next block. Okay. Okay.
Yes, so the whole idea of urban farming and urban green spaces, it all kind of collaborates together.
Mm-hmm. Yeah.
But I get your point about recognizing the value of land and its potential for generating income.
And what's interesting at our center, I have a young man who he's into urban gardens. So I love fresh fruits and vegetables. So I will go throughout the city. But anyway, we've been on this quest of finding fruit trees in the city. So we found some on Callaway. It's a whole trail. They have the apple trees, hence they have the apple garden. So I have been on a quest, and this was just purely because lemons were so expensive this summer. I was like, where are the lemon trees? Because my mom lives in Arizona, long story. She lives in Arizona. They have a ton of lemon trees. So I was going around down the street, pulling over, getting a whole box full of lemons off the trees. What it made me think is, where are our fruit trees? So it was very easy. And it was all public place. Like people like, oh, please take these lemons.
Yeah.
And I was like, and I remember as a little girl having a pear tree and an apple tree. And I was like, where are the fruit trees anymore? So anyway, that is one of our initiatives to bring back fruit trees.
Yeah.
And we have vegetables on the rooftop. But it was, so it's just interesting, something that simple, like at the bare minimum, as a little girl, that's an experience. You could live outside all day just eating fruit and stuff off the trees.
Sure.
So it's just just interesting. But I like I'm with you and I agree with it. So let us know how we can support that initiative, because you're in my community. And I think and you're right, the resources are limited, but we can build up a model. Okay. And okay, so I'm gonna go back because I saw the rice. I love okay, Chico and I would be the sale of the rice we grow, but the initial capital will come from grants and other fundraising. So I wanted to ask, is it expensive to maintain a rice farm?
I would say it depends on where it starts, where it's located, and we're planning to start it in central Nigeria. So the cost would be significantly lower than if we started in the US, for example.
Ah, okay. And how long does it take rice to harvest? This is interesting. Did I lose you?
Sorry, it's about 120 days.
120 days.
4 months.
4 months. Okay. Okay. And then the last question. So about how much land, I'm thinking about the production. Do you need a lot of land for mass production?
It's a lot of land isn't necessary. We're not intending to start for mass production. We plan to start with about 2 acres.
Okay.
Yeah.
Now, are you looking to
2
sell?
hectares.
Oh, and are you looking to sell in the US or you're selling in Africa, in Nigeria?
We're planning to start in Nigeria, in West Africa.
Nice. Very nice. So far as the cost to get started, is it a heavy investment?
Not necessarily. Based on some of the research that Chigo and I have done, it's variable, but it can be anywhere between $5,000 and $20,000. So,
okay,
yeah, I wouldn't say it's expensive.
And you know what? That's awesome. I think your fundraising is your story. I mean, that's yeah, I think people, that's a nice co-op sale, or even if you want to invite investors. I think that's the yeah, I think you could package that because that's not something you hear about every day.
Yeah, I'd agree with you.
And that crosses everybody. You know, just about everybody eats rice, so it's very relatable and yeah.
Exactly. Mm-hmm. Yeah.
Okay, and then one last question. You know, are you engaging by starting the farm in Nigeria? What would that do for that? What impact would that have on that community?
There are a couple. I think the main ones for us are to increase the production of indigenous and native rices, because the majority, if not all of the rice that's consumed is imported from abroad, usually mm-hmm. Southeast Asia. So we want to increase access to local rice and also to provide rice that is affordable because of the rising cost of food.
Yeah, that's the story. Okay. Okay. Yeah. And that's it. And now my last piece, could you package that up and almost create a, what do you call them? I'm thinking like a franchise effect. So say if it's another community outside of Nigeria, Uganda or Ghana that says, hey, we want to create a rice farm. Could you create some type of package, a how-do, or maybe you serve as consultants to say, how do we replicate this to create rice farms in different communities?
Yeah, we actually started to talk about this past week when we met to do our homework assignment for the course.
Okay.
Yeah.
That's nice. Exciting. Yeah, thank you for sharing.
For sure. And we also, because both Chiga and I are based / from Baltimore, there's also toying with the idea of having a satellite in Baltimore City, but obviously the weather in West Africa is more conducive for rice, so we're starting there. But
now, can you do a greenhouse effect?
Yes. Yeah.
I'm for it. You let me know when y'all start. I'm there. Yes.
Nice. Great.
Yeah.
Thank you.
Yes. Okay. Well, thank y'all. Y'all warmed up to me afterwards. So this kind of concludes my program. My presentation. Here is the social media stuff on how to contact. Oh, I didn't put my email address on there. I'll put my email in the chat. If you, okay, where is the chat? Okay, here's the chat. If you to contact Brainstorm, or if you have any exciting news, I am yeah, I'm here for it. Okay. And do you have any questions? Anybody have Any questions for me?
Can you talk about any additional experiences you've had, I guess, working on the for-profit model of groups of individuals coming together and buying up a neighborhood or doing a project in the neighborhood, trying to make money and do good? Where I call it, well, a friend of mine actually coined it the two-test model, making money but do no harm.
Mm-hmm. I love it. I'm gonna tell you two things that I have observed, and that's why I commended. I've seen developers come in and did not have the community connection, and that became so. Even though I'm a numbers person, most of my career has been around nonprofit, and I dibbled with city government and ran away quick, fast, in a hurry on that. But the lessons learned is starting out as an accountant, you just want to strictly look at the numbers. I want to be in my little desk in my little corner, give me the numbers and go on about your business. However, I had a valuable lesson working for Department of Housing, but for the city. And I saw where it was above the numbers. I started going out, and I was actually in capital improvement. So it was with where they were doing housing projects. And I would work with the project directors. So long story short, I started going out looking at the projects that we were looking to develop. And you start talking to the community. And so what we were recognizing is if I come in your house and I say, oh, you know what, I'm gonna get you a housekeeper because I see your house is dirty. That may not be what you want. What you may need is a plumber, because the reason why your house is dirty, you had to move everything out because it was a leak. So it was government and real estate developers coming in other communities saying what I think you need, as opposed to listening what people needed or wanted. And it became, it just, the value in listening, that's where I learned it. Because before I was just like, I just want to do the numbers. And it became a conversation like, this is not right. And so I was meeting with some of the developers, and you knew that they were in it for the money. And it caused, I can think of two programs in particular, like they couldn't complete. You can't be in it for money. Now, even though I talk about monetizing, if you're not in it for the community and for the people, it's just not going to work.
What about your experience when so oftentimes communities of color, low income communities of color are either are exploited or feel they are exploited by white developers,
mm-hmm.
or white business people, whatever it is.
Mm-hmm.
And then you have but at the same time, we will fall into the model of, we want to support Black businesses and Black developers. What's your experience when the Black developer comes in and follows the exact same model of the white developer, but we say it's okay because it's all right for one Black person to exploit us? You want to have a conversation? Let's have a conversation.
Baby, Cherry Hill. Look up Cherry Hill in Baltimore City.
Yes, okay.
I mean, Cherry Hill, predominantly Black community. Thank you. Yep, it happens all the time. Predominantly Black community, right near the water. Secluded. They've been there forever. And I recently just heard, because I was like, why all of a sudden now Cherry Hill's become the hot spot for Under Armour, and they want to redevelop this land. They said on the books it was some type of, I don't know, like 100-year lease. And whatever the year came up of this lease, maybe about 5 years ago, and Cherry Hill became the hot spot. So first it became the attack, like, oh, all these white developers are trying to take over. Then they put another face in. They were like, okay, well, we're gonna let down the guard a little bit, but then you're doing the same plan. So it's, yes, so it happens all the time. I'm in Park Heights with our project. I'm gonna tell you, my biggest fight was, so where we are in Park Heights, we're below Northern Parkway. Above Northern Parkway, just so you know the dynamics, is Pikesville. It's predominantly a Jewish community. So I met with the Jewish leaders and said, okay, look, trying to keep this building. They're very direct, and it's like, look, that's fine. We just don't want, just keep your stuff in your community. I can appreciate you being brutally honest. Okay, you're right. However, when they thought that there was a threat of the center, our center, and us not maintaining it, the Jewish people came at me with both feet. Oh, we'll take it from you. But what hurt the worst, so when I went to them off the record, I was like, look, no, I know what you heard, but this is what we're doing. We're doing it a little differently. But when I had the Black leaders in the community, they have called the Inspector General on me. They have went to housing and reported me every which way. These are Black leaders within Park Heights. So yes, it happens. We're fighting amongst each other. So, but of course, I'm a direct person. You don't have to go through, you don't have to call none of those people. Call me on the phone. Let's talk about it. What's your problem? And their problem is, we don't want you to have it. And that's like, it's not me, it's the community. If you want to be a part of the community, be a part of the community. The community don't want you to be a part of it. So I'm saying that is sometimes who you think is coming after it. It could be your own. And the only way that we operate, and this is what I tell the community, growing up in Baltimore, I've never been a fighter. However, I prepare for the war. I don't prepare for little fights. So I believe in strategy, and I don't believe in it's rules to fighting. I don't, yeah, you come into a fight and say, oh, you got a blade. Well, you shouldn't have came to try to attack me, because I'm gonna bring all my weapons. I'm thinking we come into war. So, and with my war looks like it's the power of the pen. I'm gonna write everybody, I'm gonna have all my stuff documented. So that's the only thing I say is everybody's gonna come at you every which way. And it's just always being prepared for the war, having all your documents in order, and making sure that the community, that's it, making sure the community is represented. Because guess what? And when war comes, you're not fighting. It's the community saying, oh, no, sir. We're not going to deal with that. And the crazy thing is, when we were going through it, I didn't even share it with the community. Man, they didn't put me on Fox 45. It was a mess. And so I was like, well, you know what? We'll go ahead and issue a statement, because a lot of my community stakeholders are elders. I had a firebomb 75-year-old call me up and fuss me out. No, ma'am, you will not go through this by yourself. I said, well, no, I can handle the politics. I said, what I need you to do is be the voice of the community and making sure that we're serving and we're doing everything we're supposed to do and bringing you what you need. So it's, yeah, that's the heartbreaking part of Baltimore, and then we're not even going to talk about the politics. So, I mean, if you know, and unfortunately, it's any urban city. I don't know what.
We're the same.
Yeah,
We're the same.
that's what. Yeah.
We're the same. And someone once told me that don't go to war if you're not willing to accept some casualties. And I think too often we're not willing to accept some casualties.
And that's the thing.
Yeah.
You know what? That's it. And I think that's it. And you can't do this work, and this is going to sound real morbid, but you can't do this work being afraid and doing it in fear, because they're going to attack you. And it's so that's the only advice. Just know when you doing good. And actually, I just heard it in a sermon. I don't know if it was TDJ, somebody online. They said, "Oh, when the devil's not attacking you, that means you're not doing good enough work. You're not doing God's work." So that's what I get excited on. I be like, "Oh yeah, they coming for me now. We're doing something right." So.
Yeah, let me interject two schools of thought. One is that we have to look at building capacity within our communities. And capacity helps us to address a lot of the deficiencies that we see. And I have given you a ecosystem sort of assignment to look at what's available in your ecosystem. Because if you're building out your ecosystem, then you're building out capacity. And the sad part, and the reality is this here, it takes time and resources to build capacity. And yet we're inundated with immediate needs that we have to address. So you got the immediacy of addressing some of those adversities, yet you're charged with building out your ecosystem and the capacity to address it. And so I understand that throughout this, throughout every major city where Black folks are, it's a question of capacity and whether we have strong ecosystems to move our agenda. And so I say this here, this work that we do in community building is generational work. It's generational work. And we have to look at it as that. It's generational work. Yes, we want to do things in immediate space and time, but more importantly, we have to build the foundation that will enable us to have this work picked up by others as we move throughout our lives. And so generationally, we have to build out, leaders with the consciousness to take what we give them and move it to the next level. And again, this is the hallmark of where we see ourselves. We see ourselves with lack of capacity. Yes, you may be one organization working, but what if you had 10 or 15 or 20 that had the consciousness of your organization working on a single issue? And then looking at the capacity, looking at the ecosystem, and knowing that taking Mr. Holmes' a model of land, then I would say that having someone who knows development in that space, having someone who has resources, the financing in that space, because I think what I'm saying is that we need to build out the ecosystem to support the work, to support the activity. And until we get to that point of building it out, we're going to be challenged. We're going to be challenged. but yet the work had to be done today and has to be built on for tomorrow. So that's just my school of thought. That's what I'm working on. I'm working on building out the ecosystem, and part of it is building out the cooperative ecosystem. But also too, knowing that there are a lot of intersectors that come into building out cooperatives. I need to bring in finance into this whole space, more technical training into this whole space, more resource development into this whole space, if I'm going to build out a strong ecosystem that supports cooperatives. I think I shared with you, but in the space of cooperatives, we have been working since our last conference in April in terms of building out a pathway to develop a national organization that's going to be focused on cooperatives. And so we do have a meeting that's being planned for October the 21st through the 23rd in Pittsburgh, where we're going to come together and iron out and flush out what are some of the challenges that we are seeing in the space of cooperative development, particularly in Black communities. And how do we sort of address it in systematically in terms of building out the work that needs to be done in terms of bringing in the focus around who we are, how we engage ourselves, and how we sustain this work. So I just wanted to share that thought with you as you were sharing that conversation.
And I think that's on point, because one of the slides I said, you got to have that accountant and that legal. That's how I got through.
Yeah,
I got through. I consulted every step of the way, the attorney. Even when I did my statement to Fox 45, to IG's office, that's what had us covered.
Yeah. You gotta look deeply and intentionally about who do you need in your ecosystem that can support your work. Who do you need? Rodney, who do you need? You need someone who has access to financing. Someone who has more technical knowledge than you bring to the table. Yeah, and you can grow that, and you can grow that through building relationships. And sometimes the building relationships will take you outside of your immediate environment, because sometimes in your immediate environment, you may not be able to get the support that you need. You may not be able to get that support because we all at different levels of consciousness, and I say this here that, you know, because you're Black doesn't mean that you have a Black agenda. Yeah, because you're Black doesn't mean that you have a Black agenda. And so you sometimes have to look outside of your immediate environment and look towards others that can support you and help you in the process. Yeah.
And I will say the is value, and I'm gonna shut up. Is value. We have different with community organizers and community support. We have different buckets. So whenever I need political support, I have my letter writers. I have my people who I know can make the phone calls. That's not necessarily my forte. I have my galvanizers. If we have to do something in person where we're doing we got to go down to City Hall. So it's just having, and then I have my behind the scenes, the legal, the PR people, that, you know, that banking relationship.
Yeah.
That's, yeah.
So you're utilizing your ecosystem, and not only you're utilizing the existing ecosystem, but you're growing it to bring in others to who have different skill sets than that you have, or skill sets than what you have at your availability.
Right.
Mm-hmm.
Well, I was going to just say thank everybody for allowing me to talk about some fun accounting stuff. I enjoyed meeting everyone. So please don't make this our last time we speak. Do I come back again, Ron?
No, you don't. But you did share your email address with folks, and they certainly are welcome to reach out to you. Okay. I encourage that, because this again is an ecosystem builder. Mm-hmm. Now you know someone who's in financing who can help you elevate yourself financially. So, and I hope that you utilize all these folks that you're going to meet and include them where you can in building your ecosystem around support and galvanizing yourselves as organizational leaders.
Oh, okay. Let me take a picture of your. I definitely will. Perfect. Thank you. Thank you, Ms.
Well, Charmaine, David, thank you as always. You bring something different, and every time we've done this, you've grown and you grow us. So I really appreciate how you show up and what you bring to the table.
Oh, thank you for having me. And y'all enjoy the rest of y'all Saturday.
All right. Well, folks, we're going to just go through a few things before we conclude today. I do want to share. One second. Hello. Good. No, I'm not going to send it in. No, I'm not going to accept the 5,000. And I'll talk with Ramsey on it when I meet with him on Tuesday. Yeah. All right. I got a seminar going on right now, so I can call you back. Okay, well, I don't want it. Thank you. Okay. So let me now I just took a call in from a funder, and I requested $70,000 to support our initiative, one of our initiatives in Baltimore, and they gave me $5,000. A slap in my face. So I told them, I don't want it. Keep it. Keep it. Yep, keep it. So let me share my screen. All right, can you see this? Can you see this?
Yes.
Let me know. Okay.
Yes.
Okay, well, this is a checklist I will be sending out to you. And just a checklist for you to sort of give yourself some gauges around where you're at and what things that you need to work on. And so I'll send this out to you, this checklist, and just ask some simple questions for you to consider. All right. Secondly, I'm going to send out. Can you see this document?
No.
Okay.
Same one is up.
Okay, so let me stop sharing. And let me go back to sharing. Can you see it now?
Yeah.
Okay. So Ms. Davis talked about putting together a budget. And so, and she also mentioned fundraising, particularly to the group that's doing the rice farm in terms of being able to look at. So I want you to be able to look at what you need in terms of financing or financial resources over the course of time. So I want you to go through this exercise of filling out this monthly fundraising plan. And so when you fill this out, we'll come back in our one-on-one meeting and we'll go over it. All right. So I want you to really start thinking about what you're going to need to capitalize your cooperatives or capitalize your existing businesses. All right. So it asks you questions such as the goal in your mission, the goals in your underserved community, who cares. You can put your list of people who cares, and who cares who has money, which is important. Who cares who has money? And let me. Yeah. So I want you to be able to do this, and fill it out to your best of your ability, and we can go over it. So the checklist, this monthly fundraising plan, the budget. Some of you have done it, and so I want you to go back and look at your budgets. And again, none of this has to be perfect, but at least begin to think through the exercise itself, and also looking at your ecosystem. The last part of our discussion today has been examining your ecosystem. So I want you to be able to go back and look at who and what players are in your ecosystem that you need to connect with. And if they're not there, then propose some that you see as vital to your work. Any questions about any four of these documents? Any questions?
No, sir.
Okay, all right. All right. Lastly, I need you to gather around all your participants in your teams and come up with a date that we can meet. I'm open to meeting in the evening. I'm open to meeting in the midday, depending on your schedules. So I'll work around your schedules. But I do want to get these one-on-one meetings done because there are a lot of questions I have regarding what you're proposing to do, and so we can think through and talk through where you're at and where you need to be in this process.
We're talking about a Zoom meeting?
Yes.
So I guess what we email you on our availability, and then we see if we can confirm a date.
Yes, yes. And for me, because I do have standing meetings already in my calendar, I would ask that you just at least provide 2 dates that you can meet.
Got it.
So are we on the same page with these 4 documents?
Yes, sir.
Okay. And we're on the page with scheduling a time to meet one-on-one.
Yes.
Okay, all right. Anna, is there anything else that that you want to share with the groups before we conclude today?
Just to ask everyone to send me over their homeworks from last week if you haven't done so, as well as from this week, and then also your bios and pictures if you haven't done so yet. But that's all.
Yeah. Yeah, again, those bios and headshots are going to go on our social media platform. We want to elevate this work that we're doing, and we want to elevate you as producers of this work. So certainly get us those bios and headshots as soon as you can, because this time is moving fast. We're into our 4th session. This coming Saturday, and so get us that as soon as you can. Hopefully this week you'll work on it, and I'll have Anna send another reminder out to you on Monday. All right.
I have a question on that.
Yeah.
So in the one sense, I know the importance of sharing the work that you all are doing in the network, and the fact that we are actively participating. At the same time, at least for us, part of our business model and strategy, we aren't prepared to fully reveal. So in however we walk this balance, we just like to be able to coordinate with you in a way that we can acknowledge the fact that we are here and participating and learning Black CoopNomics, but at the same time, we also want to try to keep our work in messaging strategic, so that we don't invite some of the wrath that we just talked about earlier before we have built capacity to manage it.
Oh, okay.
So just want to put that in your ear as we talk about it moving, and how our information gets shared and promoted. So I think showing us as individuals and that we're here working on learning more about Black CoopNomics, I think is fine, because everybody knows that we do that. The fact that we may be working on a hostile neighborhood takeover, don't think we want folks to know that yet. And I don't mean that literally, but you know what I mean.
Well, we're not talking about the specifics around what you're doing.
Okay, I'm raising it just so that I want there to be, just so we're on the same page. That's all. That's why I'm raising it.
So I want to be clear on what you're asking, and what the ask is, because we're asking for just to note that you're here in the space, not bringing anything why you're here in the space, but that you're in the space.
Okay.
And that's only going to be so we post the posting. We post the photos of the group of the team.
I think that's fine. We've not,
Okay.
for example, announced that we have started the Park Place neighborhood equity and enterprise. So if we're listed as Rodney, Jamie, and Levette, that's fine. But if we're listed as something different, then somebody sees and they come and ask, well, what is that? What are you doing? Why are you doing that? How come I'm not a part of it? Then all the other stuff comes to play.
All right. Well, good. So thanks for clarifying that, Rodney. And we won't post your activity to the group. Is that a problem for anyone else?
Well, I kind of understand where Rodney's coming from, as far as our development is not to the point where we actually want to advertise And maybe that can be something that I can discuss with you on the one-on-one.
Okay.
Yeah, because I have concerns about strategy also.
Okay. All right.
But
All right.
but a lot of them are questions unanswered, and so maybe that can be something that we discuss on the one-on-one.
Well. With that said, then let me propose this here, that I'll just do a blanket email that that says that these are folks who are participating in our cooperative academy, and just put you down as singular individuals under that one heading, and not bring in the fact of what you're connected to, your name, and etc. So how would that work with you?
Yeah, that sounds fine. Yeah, that sounds fine. And the headshot, and
Okay. All right.
and the name.
Okay. And your name.
Yeah.
Okay. All right. Okay. All right. Because I understand strategy, and so I want to be able to support you as you move your work along.
Yeah, because just to that point, so I already and have long promoted your network, what you're doing. Whenever I receive anything about classes that you're having, I share it on social media, I share it with others and encourage them to participate. So I think being able to model what we're encouraging people to do, I think is fine. Yeah.
I understand. All right. Well, great. So I expect to get some of these documents from you this week. If you have any questions, email Anna or me. But I expect to get them hopefully by Wednesday. And then I'll hope to say by Wednesday, at least get a schedule in terms of from you when you're able to meet. At least provide me 2 dates that are amenable, and so we'll move forward on that. All right.
Very good.
And Ron, you mentioned we will be reviewing homework assignments. Will we be doing that during the one-on-ones?
Yes, I will be doing that during the one-on-ones. So okay. So I do want to get those early on, so I have a chance to at least read through them and make some comments to them.
All right.
All right. All right, folks. Well, this is our session for today. I'm hoping that you were encouraged with the presentation by Ms. Davis. And again, you utilize these folks that you're meeting. Utilize them. That's what they're there for. They're part of a conscious community, invested in supporting your work, and maybe in some way you support their work. So so reach out to her and Julian Hill, who was our first speaker, talking about the legalities of forming cooperatives, because I know that, judging by some of your responses, there's still some questions around that. So feel free to reach out to him.
And if anyone ever needs one of the contact informations, anyone's contact info, let me know. I'm happy to send it over to you.
Well, didn't we send that out earlier?
We also sent you out a participant directory and a speaker directory earlier on in the orientation email.
Yeah. Okay. All right. So you have the contact information for everyone. All right, folks. Well, we're going to conclude for today. Thank you. Looking forward to next Saturday. Who's our speaker for next Saturday,
Anna? Let me check. Hans Petitom.
Okay, business plans.
Oh, Ron.
Is that Hans? Business plans?
Hans
yeah, business plans. So we'll be looking at developing business plans next week. All right.
All right.
All right. Again, Everyone have a great Saturday, and I'll talk to you sometime during the week. All right?
Yes, sir. Thank you.
Thank you.
Thanks so much, everyone.
All right, Anna. Okay, we'll get the email out on we'll talk about it on Monday.
Mhm.
Now we're meeting Monday and Tuesday, right?
Yep.
Okay, all right. So we'll talk about it on Monday.
Okay. All right,
All right.
then. Yep.
Well, thank
All right.
you. And I'll get this recorded and send it over to you.
Okay, great. Thank you so much. And have a
Thank
it was a great class today, I think. It was a great, such a
Thank
great
you.
class.
Yes, yes, it was. It was. Yes, yes. I can't wait to have Michael show up.
Yes, definitely.
Mm-hmm.
I still haven't heard back from him, but I'm sure he'll get back to us.
Yes. Mm-hmm. All right.
All right, then.
Well, have a great Saturday, Anna, and I'll talk with you on Monday.
All right, thank you so much. See you on Monday.
Thank you.